In 2004, Google released its revolutionary Google search, and it quickly became a massive success due to its superior search capabilities. And while Google wasn't the first search engine, it distinguished itself by perfecting the search algorithm, setting a new standard for efficiency and accuracy. Similarly, Google's Gemini wasn't the first AI player, but after its release, Google seemed to have secured a leading position in the AI landscape, and today's market rally reflected this. But it wasn't all Google. The Bank of Japan is looking like a pivot, and we need to talk about the potential long-term consequences this shift may bring to the market. As we navigate through what is seasonally the best month of the year, let's talk about stocks and the financial markets and where Google will go next. Hello ladies and gentlemen, welcome to the daily recap show where we talk about stocks and the financial markets. If you like this video, please subscribe, hit the notification bell. Let's get into it. And today's market rally was fueled by the AI hype. Google, Meta, and semiconductors doing the most, really helping the market. But it was broad-based, I would say. If you actually look at the advances and decliners, it was quite the rally. I mean, all of tech pretty much participated. So too did financials. I mean, industrials, real estate, energy didn't do as much, but there were pockets of green in almost every sector where you look. And we got the latest sentiment survey, and it seems that the bullish trend has sort of abated. We had bulls fall from 48.8% to 47.3%, and we saw a huge uptick in the bears going from 19.6% to 27.4%. And it seems a lot of people in this neutral territory started picking sides and they flipped more bearish. Tracking today's trade against the seasonals, and the AI hype saw us form this bottom right here yesterday. We just absolutely rocketed up. Tech performed well, semis performed well, and this brought us right back into the seasonal groove. We sort of tracked this trend line towards the end of December, and this is where we are right now, absolutely performing well within seasonality. And you know, we're probably going to make a lower high right here, which is actually completely normal. If you actually look at weekly performance when we've had a 10% rally up until November, we actually can go ahead and make a lower high right here before forming the low, and this can occur anywhere between today and the 14th of December before we do go on the Santa run. So despite what we've done today in technology and semiconductors, there's still a lot of room to run, at least according to seasonality. Looking at the majors, crazy trade today, guys. Technology 1.48%. Value growth in large, smalls, and mids put up a really good day, and the best day was actually small cap value. You think it'd be like large cap growth, mid cap growth. No, it was small cap value. And I showed you guys this chart all of last week, and I said there was something happening in technology. And what do you know? Corporate insiders were buying the XLK. They were buying the top. We got a trigger. And in fact, they were buying all the way up here throughout of 2023. What do you know? Google's Gemini got released, and this now we know why insiders were buying. They see the prospects and they think that technology is cheap looking ahead. And the AI rally is probably going to continue into 2024, 25, 26. And insider purchasing stock is normally a very good sign. Have a look at this. Return comparisons compared to the SPY. When insiders buy, a typical return of 39.7% 1 year later compared to the S&P 500 of 22.5%. Very positive stats right there. And it just goes to show that for those of you that bought technology even last week, even after the 10% November run, you'd be securing some alpha here today. And the tech story, guys, was all on Google's new Gemini AI, and it's absolutely incredible. It revalidated the whole AI story that we've sort of forgotten since July early this year, because a lot of that rally was dependent on AI. And we're actually going to go ahead and watch a couple of seconds from the clip they released. It's incredible.
All right, testing Gemini. Here we go.
I know what you're doing. You're playing rock, paper, scissors.
Which way should the duck go?
Going left leads to a duck, which is a friend. Going right leads to a bear, which is a foe.
Is this the right order?
No, the correct order is Sun, Earth, Saturn.
Now, absolutely incredible stuff right there. It's so intuitive. Just goes to show where AI can go. This is just the beginning. Where we are right now with AI is where we were with the internet 2000, 2001, around then. AI wasn't the only thing. It was one of the things, but it wasn't just AI. There was a lot of other stuff that happened in the market. One of it was jobless claims. It was a nothing burger. It came in as expected. And I think even if this came in at like 400,000, we still probably would have rallied because the AI flows were just so strong. But jobless claims came in. It wasn't anything significant, but we do have the NFPs tomorrow, which is the big one. Some more big news. The Bank of Japan, and this is something we really have to watch in 2024, guys. The yen surged after the Bank of Japan hinted at policy shifts, sending the dollar lower. This is what Japanese bonds did overnight, trading like actual altcoins, shitcoins, 100% on the 2-year, crazy 6% returns on the 30-year. Look at this, guys. This is just absolutely wild trade, and this affected US yields as well. I mean, we saw massive yield increases in the 10-year, 20-year, 30-year, and this is called the carry trade. And let me explain the basics of how this works. So the Japanese government signals that they're going to shift, okay? They're going to switch up, they're going to pivot. What does that mean for traders? Well, it's quite simple. This makes Japanese currency far more attractive. So what traders do is they see US treasuries, this is US treasuries, and they sell US treasuries. By selling US treasuries, they get US dollars, and this is why treasury yields were weaker on the day. So they sell US treasuries, get US dollars, then they take the US dollars, buy Japanese yen. So they sell dollars, buy yen. This weakens US dollars, and then traders hold Japanese yen because the yields are significantly better. That's how it works, guys. This is why we saw treasuries down, dollar down, yen up. And I think long term, this is actually going to be a really good thing for the Japanese economy. It might hurt short term, but I do think like on a longer time frame, if they do go ahead with this pivot, it's going to be good for their economy. Now, we also had some earnings today, guys. Let's not forget earnings. We had Broadcom, a semiconductor, Lululemon, DocuSign, and Smartsheet all report earnings today. People didn't like Broadcom's earnings. I will get into it later. Same with Lululemon. They were sold off after hours. DocuSign did pretty good actually, but these were Broadcom's results. So Broadcom, ticker AVGO, beat on earnings per share, but their sales came in a bit lower than expected, and that's why the market didn't really like their results. But they did offer better guidance compared to what the market was expecting. Now, let's switch gears and talk about multiples. And this is exactly what today's trade was. It was multiple expansion. Fundamentally, nothing changed in the market. It was just the prospects of something coming, which was the AI trade for tech and semiconductors. And this is what we get when we have multiple expansion. So this was at the start of the day, it was probably about 18.7. The S&P 500 multiple after today's trade is probably closer to 19, maybe 18.9 around there, but definitely higher than 18.7. And the forward PE, this looks fairly unattractive on a relative basis, but what does look attractive is the equal weight, trading at 15.3x. This is why I think the equal weight looks really attractive right now. BofA put this out on their trade desk yesterday, and I'm glad I got a hold of it. They believe that in 2024, a flat Magnificent 7 and a broadening out in the 493 will get us to 5,100. Very, very bullish here from BofA, and let's actually go ahead and read it. We forecast all-time highs for the S&P 500 in 24 with a year-end target of 5,000, but unlike this year, which the Magnificent 7 did 70% of the work, we expect broader leadership. Can the S&P 500 rally without the Magnificent 7 leading the way? We think so. Even if the 7 stocks flatline and if the multiples on forward earnings for the rest of the market flatlines at about 15 on average, we forecast EPS growth put the index at 5,100. The average stock would still be 13 below its post-COVID highs, just 1 out of 4 eclipsing the post-COVID highs. And they believe that market breadth is going to improve. And at the current moment, only 24% of stocks of the S&P 500 trade within 10% of their all-time highs versus the 28% of the historical average. And this is what it looks like on a chart. And pretty much bull markets end with really great breadth. We don't have great breadth right now, even with what we've seen with the broadening out and rotation in the last, week or two. Normally, bull markets end with breadth around this area right here. Essentially what BofA is saying is with EPS growth, we could probably go up around to this area or at least to the average. And so we see broadening out in the 493. Even if the Magnificent 7 just flatline, we still should get 5,100 for 2024. Very, very interesting stuff right there. And I'm going to release my 2024 targets closer towards the end of December, and you're going to be very surprised with what I have. So again, guys, subscribe if you want all of my updates and follow me on Twitter too. But a lot of the trade that we're seeing right now is going to depend on rates, and the market has priced in 125 basis points worth of rates with the 10-year at 4.2%. And the question is, will the Fed deliver on those cuts? And if they do, it's normally bullish for stocks contingent on if we get a recession or not. And this is the S&P 500 after the first Fed rate cut. Okay, if we do get a recession, normally stocks tend to plummet quite significantly because recessions are almost never discounted in advance, and we could see anywhere from 15 to 20% drawdown in the S&P 500. But if we avoid the recession, possibly get a soft landing, multiples normally expand, and we could see returns in that year upward of 10%. This is the difference here. So it's, do we get a recession? Do we get a soft landing? Do we miss both of those? And this is what we can expect if the Fed does cut, and I do think they're going to cut. And if we look at the S&P 500 forward returns following the first rate cut, in the 9 instances that it did happen, 4 of them we didn't get a recession. In 84, 89, 95, 98, and the 12-month returns for all of those were 13%, 10%, 18, and 28% respectively. But when we did get a recession, we saw drawdowns anywhere from about 10% all the way to a 32% decline. Now, what does the Fed need for rate cuts? Well, it needs a couple of things. It needs core PCE below its 2% target or at its 2% target, and then a decline in payrolls. We're going to keep a strong key eye on employment data and PCE data in 2024. Now, something I've seen that was very interesting as well, central banks are buying gold. And you guys know that yesterday I outlined that I do think we're probably going to go into a very mild recession or a bumpy soft landing. And I told you guys how I'm allocating my portfolio, but about 3 to 5% is going to be in gold. Central banks are purchasing gold at a very, very alarming rate, 2023. And if this purchase rate continues, it's going to be very, very bullish for gold as a whole in 2024. Let's talk seasonality. I showed you guys this yesterday, and in the S&P 500, normally we can expect a return in December of about 1.4%. About 74% of the time we are higher. In the Russell 2000, however, this is very interesting. 2.1% return, right? 33 wins, 11 losses, higher 75% of the time. A very bullish month for the Russell 2000. 0.7%, 70 basis points worth of alpha it delivers over the S&P 500. And if you actually dive into small caps, normally it actually bottoms around the middle of December. So anywhere between now and the next 3 to 4 trading days, we could see a bottom in the Russell 2000, provided everything goes according to plan and nothing major comes up like what the Bank of Japan did. But we should see a rally into the end of year, possibly going to as far as March or late February in the Russell 2000. So this is where we currently are, probably around here, somewhere around here, and we are looking for a bottom. If some of you have missed the rally, there is possibly a pullback in small caps, which could bode very well for an end of year run. But looking at the market as a whole, the S&P 500, this is the aggregate of all years. We are expecting a very bullish run from about the 16th or the 15th of December right here. We should bottom out before we have a pretty violent Santa rally, at least according to seasonality. And we are in a seasonally bullish period. Vanna and charm flows are strongest in the 2nd week and 3rd week of the month. Next week is the 2nd week. We are going into a very, very supportive period. Dealers are very active and very supportive, especially in a positive gamma environment. And we are in positive gamma right now. Now let's have a look at the gamma heat map. And I've been saying for the better part of, the last 3 weeks, 4600 and 4500 remain the chop zone. And we could see there's a heavy gamma area right here, which is going to be very, very supportive for equities. And maybe we should move the line in the sand up to this 4530 area, because this is a lot of gamma. We also see a lot of gamma right here at the 4600, 4590 area. But if we do get above it, there is not much gamma up here, and we could sort of drift all the way to this neutral gamma zone at 4630. So, for the bulls, they really want to get above this 4590 level and possibly 4600. And the bears, they really need to push below this, but it's going to be extremely hard. This is a lot of gamma, and going into a very supportive time in the month, the 2nd and 3rd week of the month, it's going to be very hard for bulls to do anything. What we probably do is chop with a bias of higher, but that's all going to depend on tomorrow's NFP. So this is the year-to-date chart of the S&P 500, and for those of you that are new here, I told each and every single one of my followers to buy everything at this level. We bought and we've been long ever since, and ever since we've sort of just been trekking a lot higher. And you see this is conducive to a positive gamma environment. When we're in positive gamma, dealers buy dips, sell rips. When we're negative gamma, dealers sell into weakness, buy into strength. So we are in positive gamma right now, and this is why we're just going to chop in this zone. And since we are in positive gamma, this is why I believe we're just going to chop in this 4500 to 4600 area. And I'm actually going to move this higher. I do think that we could actually move this to 4530 30 now, you know, really get some tight levels. If we do cross this level on AI hype tomorrow, you know, above the 4600 level into this 4630 level, I think it's going to be very, very constructive, especially if we can get like a weekly close above here. If we can get a weekly close in the 4600 to 4630 area, it's going to be very constructive for bulls to go ahead and, you know, break these highs and then go and seek new all-time highs, you know, the same highs we made in early 2022 here and here. So at least that's the roadmap for the bulls. The roadmap for the bears is this area right here, 4530, and probably closer to 4500 level. Anything below here, we do flip into negative gamma. Just be wary of that. But I think dealers are going to support price all the way up here. There's a lot of collateral and reinvestment happening from next week onwards. Better to be long than anything else. I wouldn't chase the trade. If you're not long from here, too bad. Better opportunities will come in 2024. So follow me on YouTube, on Twitter, so you know exactly the plays I'm taking, guys, because we're going to make a lot of money in 2024. 2024 is going to be a very tough year of trading. I can just feel it. It's going to be a very, very hard year, and I'm going to release my end of year targets at the end of December. Now, looking at some unusual options activity, we had it was a very average day in terms of volume. There wasn't, you know, a whole heap of volume considering the rally, but we did see, you know, calls are sort of like cooling off. It was close to 60%. It was at 59% just on Monday or last week Friday. This is cooling off, which is a good thing. You kind of want to see that, and we are still getting, you know, pretty good volume in December. And December in terms of volume and the amount of trading days is fairly low. There's some interesting stuff I've seen right here. We've seen a lot of solar, and I do think that, you know, solar is about to probably take off, and it's really good to see that they're getting some like pretty significant volume. There's a lot of puts here, which is actually creating a put wall. But I do think, like, you know, solar stocks for like a midterm trade could be something you guys look at. We saw AMD up 9%. Absolutely wild trade, a ton of calls against not many puts. And then we saw the usual suspects, you know, Meta, Google, Broadcom, Coinbase. You know, Coinbase up another 1.2% today. Crazy. They're up what, 50, 60, 70% for the month, something like that. Just absolutely wild trade happening right there. Looking at some dark pools right now, this is the Treasury Bull ETF, and something really interesting here. We saw a very large trade, the fourth biggest trade, and then we saw the number one trade since inception occur. So this could be, you know, this guy could be short and he could be defending his position right here. And if we do get above this 60 level, maybe into 62, 63, I could be actually very bullish for treasuries, and we could go a little higher. But if he does defend his zone, it's probably, you know, lower back to this $50 level where there is quite a bit of support right here. There's a lot of trade. Looking at the XLC Communication Services Spider Fund, I gave you guys this in early November. I showed you this. I said, hey, we're seeing some big trades right here. When you see two trades in a row like this, it's normally like insiders knowing something. We did show you that the XLK, there was insider buying. That's exactly what we're seeing. You know, we did come back down on support right here, or just above right here, and we're probably going to go higher. XLC on Google, Meta, on Netflix, all of these tech stocks in that index are going to move a lot higher. Looking at data, tomorrow we have the big one. We have non-farm payrolls as well as hourly wages year over year, month over month, as well as consumer sentiment, guys. So going to be a very volatile day tomorrow, especially if some of these numbers miss, especially the non-farms. If you've made it up until here, guys, thank you so much for watching. If you like this video, please leave a like, subscribe, hit the notification bell, leave a comment down below, guys.